Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
First up on our docket today, we have some exciting news coming from Ottawa. The federal government is set to make a major housing announcement. While the specifics of the announcement have yet to be disclosed, it's anticipated that this could have significant implications for the housing market across Canada.
That's right, Steve. There's a lot of buzz around what this announcement could entail. Given the current housing market conditions and the ongoing challenges faced by many Canadians, any federal intervention could provide much-needed relief or support.
Absolutely, Janine. From an economic perspective, these announcements often aim to stimulate growth or address specific market challenges. It could involve new policies, funding for housing projects, or even adjustments to existing regulations. The goal is usually to create a more balanced and accessible housing market.
And on the more personal side, such announcements can bring hope to individuals and families looking to buy their first home or those struggling with affordability issues. It's about creating opportunities for Canadians to achieve their home ownership dreams, which is something I'm very passionate about.
Indeed, Janine. As we await the details of this announcement, it's crucial for those in the industry and potential homeowners to stay informed. We'll continue to monitor the situation closely and provide updates as they become available. Next on our list, we're looking at the latest data from the Canada Mortgage and Housing Corporation, which shows a 4% rise in housing starts in July. This is quite a notable development, considering the varied regional patterns across the country.
Yes, Steve. It's interesting to see how different regions are experiencing different trends. For instance, while Quebec and the Prairie provinces have ramped up construction, Toronto saw a significant 69% drop in housing starts compared to last year. That's a huge contrast.
It is, Janine. The numbers in Toronto are especially striking, given that it's such a key market. The decrease there was driven by a drop in both multi-unit and single detached starts. Meanwhile, Montreal experienced a 212% increase, thanks to a spike in multi-unit starts.
That's a massive jump for Montreal. It just goes to show how dynamic the Canadian housing market is. Even Vancouver saw a 24% increase in multi-unit starts. These regional differences really highlight the importance of understanding local markets when it comes to real estate investments.
Absolutely. Understanding these nuances is crucial. The seasonally adjusted annual rate of urban housing starts was up by 5% in July, reaching 273,618 units. In rural areas, the starts were at an annual rate of 20,467 units. These figures paint a picture of a market that's moving, but not without its complexities.
And while there are increases, the Canada Mortgage and Housing Corporation also indicates that the market might cool down in 2025 due to factors like trade tensions and slower population growth. There are expectations of home prices potentially dropping by around 2%, particularly in Ontario and British Columbia.
That's right, Janine. The economic uncertainty and increasing unemployment are playing roles here. However, the rental markets might ease a bit as more supply becomes available. It's a mixed bag, but there's hope for a gradual recovery in 2026 as conditions improve.
It's a challenging time, but also one full of opportunities. As always, staying informed and understanding these trends can help potential homeowners and investors make the best decisions for their circumstances.
Let's delve into the latest inflation trends in Canada and what they could mean for interest rate cuts. According to Statistics Canada, the annual inflation rate slowed in July, with consumer prices rising 1.7% year over year, down from 1.9% in June. This cooling inflation has sparked discussions about potential interest rate cuts by the Bank of Canada in September.
It's interesting to note that the slowdown was primarily driven by a significant drop in gasoline prices, which fell by 16.1% compared to last year. However, when you exclude gasoline, the consumer price index actually increased by 2.5%, matching the rises we saw in May and June.
That's right, Janine. The market reacted quickly to this data, with traders now pricing in a 40% probability that the Bank of Canada will lower its benchmark rate by 25 basis points at its upcoming meeting. This is up from roughly one-third odds before the report. Yet, economists are still divided on whether the current conditions justify a rate cut.
Andrew Grantham, a senior economist at CIBC Capital Markets, mentioned that the latest figures have cleared a hurdle towards a potential rate cut in September. However, as he pointed out, there's still a lot of data to be released before any decisions are made.
Exactly. Andrew de Capua from the Canadian Chamber of Commerce suggests that if the current momentum continues, the Bank of Canada might indeed lower rates in September. But he also warned that tariffs could push consumer prices higher, which complicates the outlook.
On the flip side, Michael Davenport from Oxford Economics argues that the underlying inflation remains too firm for the Bank of Canada to feel comfortable cutting rates just yet. And Claire Fan from Royal Bank of Canada highlighted that one reading doesn't make a trend, emphasizing the persistent broad-based inflation pressures.
Labor market data might also influence the decision. Canada lost 41,000 jobs in July, pushing unemployment close to 7%. Tiago Figueiredo from Desjardins noted that this indicates plenty of slack in the market, which could sway policymakers towards a rate cut.
The Bank of Canada has kept its policy rate steady at 2.75% for the past 3 meetings. With inflation moderating and uncertainties rising, it seems the central bank will weigh domestic data more heavily than the U.S. Federal Reserve's actions.
Bradley Saunders from Capital Economics suggests that policymakers will likely want to see more sustained slowdowns in GDP and labor market data before making a commitment. The next decision is set for September 17th, so we'll have to wait and see what unfolds. Let's turn our attention to some significant regulatory news coming out of Ontario. The Financial Services Regulatory Authority of Ontario, or FSRA, is taking action against mortgage agent Sean Leonard Ruccia. They're looking to revoke his mortgage agent Level 2 license and impose a hefty $70,000 penalty.
This is a pretty serious development, Steve. The allegations suggest that Ruccia was involved in arranging high-cost mortgages that were unsuitable for his clients, many of whom were seniors. It's concerning to hear that these mortgages had annual percentage rates ranging from 30.46% to 38.82%, which is extremely high.
Indeed, Janine. The FSRA claims that these were interest-only mortgages with one-year terms, requiring full repayment of the principal at maturity. The fact that Ruccia didn't present other lending options is a major issue here, especially when dealing with vulnerable clients like seniors.
And what's even more troubling is that in at least one case, there was no income documentation collected, and a borrower mentioned that the mortgage terms were not explained to them. This lack of transparency can have devastating consequences, like the borrower who had to sell his home to repay the mortgage.
FSRA alleges that Ruccia's actions breached several regulations, including failing to ensure the suitability of the mortgages and causing his brokerage to violate other regulatory requirements. They argue that his past conduct indicates he might not handle mortgages with the necessary integrity and honesty.
Ruccia has requested a hearing before the Financial Services Tribunal, which will review the proposal. It's a reminder of the importance of regulatory oversight to protect consumers, particularly those who might not be fully aware of the complexities involved in mortgage arrangements.
Absolutely, Janine. For mortgage agents, it's crucial to adhere to ethical standards and provide clients with all necessary information to make informed decisions. This case highlights the consequences of neglecting those responsibilities, and it's a stark warning to the industry.
It's about ensuring that everyone, especially vulnerable groups like seniors, are treated fairly and with respect. As the situation unfolds, It's essential for industry professionals to reflect on their practices and prioritize the best interests of their clients.
Let's turn our attention to a significant development in the Ontario real estate sector. The Real Estate Council of Ontario, or RECO, is facing criticism after it decided not to pursue charges against the co-founders of iPro Realty, Rui Alves and Fideli Colucci, despite millions of dollars going missing from the brokerage's trust accounts.
That's quite a controversial decision, Steve. The fact that these funds disappeared from trust accounts, which are supposed to be highly regulated and secure, raises serious concerns about oversight and accountability. Many in the industry are understandably upset.
Indeed, Janine. According to RECO, Alves and Colucci terminated their registration as brokers, with Alves agreeing never to reapply. This decision has sparked outrage, with industry leaders like John Meehan, a former president of the Toronto Regional Real Estate Board, calling for more transparency regarding the decision-making process.
And Steve, let's not forget the strong reactions on social media. Mortgage broker Ron Butler was very vocal, demanding the resignation of RECO's board and calling for a complete overhaul of its leadership. It's clear that many feel the current leadership failed in its duty to protect consumers and agents.
That's right, Janine. The missing funds first came to light in late May before a scheduled inspection, and RECO later confirmed a $10.5 million deficit in iPro's consumer deposit and commission trust accounts. This led to the brokerage's closure, which affected 2,400 agents across 17 offices in the Greater Toronto Area. It's a huge blow to the local real estate community.
It certainly is, Steve. The agents have been assisted in transferring to new brokerages, but the financial implications are still significant. Commissions owed to agents now have to be claimed through insurance, which is capped at $200,000 per individual. Buyers and sellers with deposits held by iPro are also facing uncertainties and are being advised to verify the status of their funds or file claims.
Exactly, Janine. While Alves and Colucci have reportedly repaid about $3 million through asset sales, reducing the shortfall to less than $8 million, the impact on consumers and agents remains severe. RECO has notified the Peel Police's Fraud Bureau about potential improprieties, indicating that a criminal investigation could still be on the table.
And it's crucial for the real estate community to have faith in the regulatory bodies that oversee their industry. This situation underscores the importance of transparency and accountability to maintain trust. As this situation continues to unfold, it'll be essential for RECO to communicate openly and work towards rebuilding confidence.
Our final topic for today's episode is an exciting development in the Ontario real estate market. Royal LePage has announced the addition of our neighborhood realty to its network in Ontario. This expansion is a significant move for the brokerage, which was previously operating independently.
That's right, Steve. This is a big step for our neighborhood realty, which is led by Rhonda and Bob Best, along with their co-owners Louise and Paula Lamaris and Gary and Darlene Hibbert. With over 140 sales representatives, they're poised to make a substantial impact in the region.
Absolutely, Janine. Rhonda Best expressed her excitement about this milestone, noting that by aligning with Royal LePage, they're setting the stage for the next chapter of growth for their brokerage, agents, and clients. It's a strategic move that could elevate their service standards across Southern Ontario.
And it's not just about growth, Steve. Our neighborhood realty has been serving areas like Durham, Toronto, and Northumberland, handling everything from residential to commercial transactions. With more than 30 years of combined experience among the ownership group, they're bringing a wealth of knowledge to the Royal LePage family.
Indeed, Janine. The collaboration with Royal LePage is likely to enhance their capabilities and reach, offering clients even more comprehensive services. This kind of expansion is indicative of a strong market presence and a commitment to excellence in real estate.
It's inspiring to see such dedication to raising the standard of real estate service. As the industry evolves, partnerships like this one are crucial in adapting to new challenges and opportunities. Our neighborhood realty's integration into Royal LePage is a testament to their forward-thinking approach.
Well said, Janine. As we wrap up today's episode, it's clear that the Ontario real estate market continues to evolve with dynamic changes and promising expansions like this one. Keeping abreast of such developments is key to staying competitive and informed. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.